Pi Network launched with a bold vision. A vision that sought to redefine the landscape of digital currency. It wasn't just about creating another cryptocurrency, it was about democratizing access to the world of crypto, making it available to anyone with a smartphone, to make cryptocurrency accessible to everyone right from their phones. The idea was simple: break down the barriers that kept ordinary people from participating in the digital economy. Unlike Bitcoin's energy-hungry mining, which requires specialized hardware and consumes vast amounts of electricity, Pi let users, pioneers, earn coins by simply tapping a button daily. This innovative approach eliminated the need for expensive equipment and technical expertise, opening the door for anyone to start earning Pi. This simplicity fueled explosive growth, as people around the world embraced the ease and accessibility of Pi Network. Drawing in millions worldwide, creating a truly global community of users eager to participate in this new digital economy, and making crypto feel approachable for the first time. It was no longer an exclusive club for tech experts and investors, it was something anyone could understand and be a part of. Founded by Stanford grads, Pi's academic roots gave it early credibility, lending an air of legitimacy to the project and reassuring users that it was built on solid foundations, and a clear, phased roadmap, outlining the project's development milestones and providing a transparent plan for the future. Mobile mining, testnet, a crucial phase for testing and refining the network's functionality, then mainnet. The launch of the mainnet would mark the official launch of the Pi cryptocurrency, allowing users to trade and transact with their Pi coins. The project's mission was more than just another coin. It was about building something bigger and more meaningful. It aimed to build a peer-to-peer economy, where users could directly exchange goods and services using Pi as a medium of exchange, and a platform for decentralized apps, fostering innovation and creating new opportunities for developers to build on the Pi network. Pi's daily mining ritual and referral system incentivized user engagement and helped to spread the word about the project. Created a strong sense of community and habit as users checked in daily to mine Pi and connect with other members of the network, making users feel like early builders of a new digital world, contributing to something innovative and potentially transformative. For many, Pi was their first step into crypto, a gentle introduction to the world of digital currencies and blockchain technology, offering both education and a sense of inclusion, empowering them to learn about and participate in the future of finance. The promise was clear, a promise of a more equitable and accessible financial system. Democratized digital currency, ensuring that everyone has the opportunity to participate in the digital economy. Correct crypto's wealth concentration, addressing the issue of wealth inequality that has plagued the cryptocurrency space, and give everyone a stake in the future, a future where digital currency is not just for the privileged few, but for everyone. The vision extended to real-world utility, beyond just being a speculative asset. Marketplaces where users could buy and sell goods and services using Pi, dApps, offering a wide range of services and applications built on the Pi network, and a thriving ecosystem powered by Pi. A self-sustaining economy where Pi is used for a variety of transactions and interactions. This narrative of inclusivity and innovation captured imaginations, inspiring millions to join the Pi network and become part of something bigger, setting the stage for what many hoped would be a financial revolution, a revolution that would empower individuals and create a more equitable financial system. The world watched with bated breath as Pi network progressed through its development phases, waiting to see if Pi could deliver on its ambitious promise. The pressure was on to turn the vision into a tangible reality. The foundation was set, a strong community had been built, and the technology was in place. Now, the challenge was turning vision into reality. The next steps would be crucial in determining whether Pi network could truly revolutionize the world of digital currency. Despite its massive user base, which once buzzed with the promise of a new digital currency revolutionizing the way we transact, Pi network now faces stagnation. The initial fervor has cooled, and the project finds itself grappling with the challenges of maintaining momentum. As of July 2025, the token remains unlisted on major exchanges, a critical step for any cryptocurrency seeking widespread adoption and real-world utility. It's locked within its enclosed mainnet, a walled garden that restricts the flow of Pi and prevents it from being freely traded or used in the broader crypto ecosystem. The initial excitement has faded, the celebratory atmosphere replaced by a sense of anticipation that has stretched on for far too long. It's been replaced by impatience and skepticism, as users begin to question whether the promises made will ever materialize. They wait for real-world value, for the opportunity to use their Pi to purchase goods and services, or to trade it for other cryptocurrencies. While millions still mine daily, diligently tapping their phones in the hopes of accumulating a valuable asset, the lack of open trading or clear utility has cast a shadow of doubt over the project's long-term prospects. This has left many questioning the project's direction, wondering if Pi Network will ever truly deliver on its ambitious vision. Other crypto projects have launched, capitalizing on the momentum and innovation within the blockchain space. They've built ecosystems, fostering vibrant communities and creating real-world applications for their tokens, and they've achieved market success, demonstrating the potential of blockchain technology to transform industries and empower individuals. All this has happened in the time Pi has remained in development, still striving to reach its full potential. The community is now divided. Loyal supporters trust the slow, methodical approach, believing that the team is carefully laying the foundation for a sustainable and impactful project. Meanwhile, critics point to missed deadlines, to the repeated delays in launching the open mainnet and enabling true trading of Pi. They see a lack of tangible progress, a disconnect between the project's lofty ambitions and its current state. The core tension: can Pi maintain faith and engagement, keeping its vast community invested in the project's future? Can it navigate technical and regulatory hurdles, overcoming the obstacles that stand in the way of its widespread adoption? Without momentum, even the largest community risks losing hope, its enthusiasm waning as the wait continues. The project stands at a crossroads, a critical juncture where its future hangs in the balance. It's waiting for a breakthrough, for a catalyst that will reignite the excitement and propel it forward, or it risks irrelevance, fading into obscurity as other projects take center stage. Analysts see Pi's core problem as a model built on promises, not products. The project's value hinges on launching an open mainnet, a milestone that keeps slipping. The enclosed mainnet, meant for testing and KYC, has become a bottleneck, stalling price discovery and real economic activity. Pi's mining, just tapping an app, resembles a token giveaway, not true crypto mining, raising doubts about scarcity and security. Without a robust consensus mechanism or open market, Pi's value is speculative, driven by belief rather than utility. Meanwhile, faster-moving competitors have launched, built dApps, and captured market share. The longer Pi stays closed, the harder it will be to catch up. The clock is ticking for Pi to prove its model can deliver real value. Pi's strategy to keep its mainnet enclosed, a decision made with the intention of fostering a robust and secure ecosystem until the ecosystem matures, has inadvertently backfired, creating a situation where the very growth it sought to protect is now stifled. The initial caution, while understandable, has led to unintended consequences. Developers hesitate to build on a platform, unsure of its future and the potential for widespread adoption. The lack of an open market and tangible utility makes it a less attractive prospect for innovation. With no liquid token or open market, the value proposition remains theoretical, stalling real utility and hindering the development of practical applications that could showcase Pi's potential. The result is a chicken and egg problem, a classic conundrum where progress is blocked by interdependent conditions. No utility without an open mainnet because developers are wary of investing time and resources into a closed system. No open mainnet without utility, as the core team seeks to ensure a stable and functional ecosystem before fully opening the doors. The prolonged enclosed phase has drained community momentum, leading to frustration and a sense of stagnation among early adopters, leaving millions with locked, unusable Pi, tokens that represent potential value, but currently offer no tangible benefit. The daily mining ritual, once a symbol of participation and belief in the project, now feels more like waiting than building, a passive activity rather than an active contribution to a thriving ecosystem. Without price discovery, the fundamental mechanism for establishing value in a market, Pi's true value remains a mystery. An enigma that fuels speculation but provides no concrete basis for investment or economic activity. Internal trades are anecdotal, not market-driven, reflecting individual needs and perceptions rather than a true consensus on value. This isolation prevents external investment, limiting the influx of capital that could fuel development and expansion. And informed decision-making, hindering the ability of potential investors to assess the project's viability and potential returns. The paradox: the central contradiction at the heart of Pi's strategy. In seeking a perfect launch, a flawless debut on the open market, Pi risks losing the very community it built, the loyal base of users who have invested their time and energy in the project. Until the network opens to the wider crypto world, embracing the volatility and opportunities of the open market, its economic potential stays locked away, a treasure trove of value that remains inaccessible and unrealized. The project must break this cycle to move forward, to escape the trap of its own making and unlock its true potential. The world is watching for Pi's next move, eager to see if it can overcome this paradox and fulfill its promise. Pi's biggest challenge is proving its utility. Beyond being widely distributed, it lacks a unique use case that sets it apart from thousands of other tokens. Current Pi-powered marketplaces are small and limited, with transactions mostly for minor digital goods. Analysts ask, what real problem does Pi solve? Without a killer app or clear advantage, it risks being just another speculative token. Businesses have little incentive to adopt Pi over established crypto or traditional payment systems. For Pi to matter, it must enable real commerce, forge partnerships, and empower developers to build meaningful applications. Until then, its value remains speculative, driven by hope rather than utility. The project's future depends on answering, what is Pi for? Pi's KYC process, meant to ensure real users, has become a major bottleneck. Millions are stuck in limbo, waiting months or years for approval due to slow, error-prone verification. Only KYC-verified users can access the mainnet, fragmenting the community and limiting network effects. This undermines Pi's vision of a unified global economy. The centralized KYC approach clashes with crypto's decentralized ethos, creating delays and frustration. Resolving this is critical. Without it, Pi's massive user base remains mostly inactive. The project's growth depends on unlocking this barrier. Comparing Pi to projects like Solana and Helium highlights its unique path and its pitfalls. Solana built a robust ecosystem first, attracting developers and capital, which drove demand for its token. Helium offered real-world utility from day one, creating demand for its HNT token through a decentralized wireless network. In contrast, Pi focused on mass user acquisition, deferring utility and open markets. This user-first approach is risky. Value in crypto comes from economic activity, not just user numbers. Pi's challenge is to turn its vast community into an active economy. Its peers succeeded by delivering immediate, tangible utility. Pi's asset, its user base, remains untapped potential. To match its peers' gains, Pi must shift from building a crowd to building a marketplace. The market rewards performance, not just promise. The next phase will determine if Pi can make that leap. For Pi to break its stagnation, decisive action is needed. First, the team must publish a clear, achievable timeline for the open mainnet ending years of ambiguity. Accelerating and streamlining the KYC process is essential to unlock the full user base. Partnering with established identity services or investing in better infrastructure could help. Next, Pi should proactively seed its ecosystem, fund developers, host hackathons, and partner with businesses to create real use cases. Showcasing successful dApps would inspire further growth. Transparent, frequent updates focused on technical progress, not just community milestones, would rebuild trust. Open communication about challenges and solutions is key. By combining a clear roadmap, KYC resolution, utility push, and transparency, Pi could reignite its community and attract new interest. The time for waiting is over. Now is the time to build. In summary, Pi Network's potential is huge, but it's trapped by its own delays and strategic missteps. The enclosed mainnet, lack of utility, and KYC backlog have stalled progress and kept value theoretical. Other projects have shown that real-world utility and economic activity, not just user numbers, drive success. Pi must now shift from user acquisition to ecosystem activation, open the mainnet, resolve KYC, and build real utility. If it can pivot, Pi could still become a major player. Until then, it remains a fascinating experiment, millions waiting for value to be unlocked. The next chapter depends on bold, decisive action.